Sonlin and Herwig Konings are founding partners of Security Token Group. All opinions expressed by them or guests on this podcast are solely their opinions and do not represent the views of Security Token Group or its subsidiaries. You should not take any opinion expressed on the show as a specific inducement to make a particular investment or follow any investment strategy. This podcast is for informational purposes only.
Welcome back to the Security Token Show. I'm your host, Herwig, and I'm joined by my co-host and business partner, Kyle Sonlin.
What's up?
We're back again in our home of Miami, Florida, and I can't wait to dive into another great episode of the show. As a friendly reminder to our podcast listeners, the show is now on video as well, posted on YouTube on Fridays alongside our audio version. Of course, before we can get started, we want to share a word from this week's sponsor. This episode of the Security Token Show is brought to you by TurnCoin, powered by The Exchange. Based out of South Africa, The Exchange is launching a celebrity NFT marketplace for athletes, musicians, actors, and all influencers to launch digital and tokenized trading cards for purchase. The firm has ambassadors like Drew Brees, Patrick Mahomes, Randy Jackson, and other notable high-profile names, and is currently raising capital through an innovative security token called TurnCoin. TurnCoin represents the company's total revenue earned through the platform, and they are selling a portion to investors via a security token offering that is live now. Accredited investors in the United States and investors internationally can now invest in what may be the game-changing platform for talented individuals worldwide who can use the platform to fund their goals on top of a fully transparent revenue distribution system. 10% of TurnCoins have been committed to charities supporting clean water and other initiatives worldwide. To read more about the offering and the exchange's platform, check out turncoin.com for more information.
Thank you to TurnCoin and The Exchange for sponsoring this week's episode. We've got a jam-packed episode for you today. If you're new, the breakdown of how we get this show going is we start out with our companies of the week. This is where Herwig and I picked one company that we wanted to specifically highlight in making the biggest moves in the industry this week. From there, we move into our top 5. Those are the 5 headlines that you really couldn't miss over the last week of news. And really, this is the section you want to make sure to get your digest of what's going on. From there, Herwig's going to take it away with the industry news, covering the institutional moves from banks, from financial service providers, and everyone else around the world. Then we pass it off to me, where we're going to dive into some new security token offerings and what the market trading is at. And then finally, we cover our main topic, which, Herwig, what is that this week?
The SEC versus the CFTC. Maybe you know both of them, maybe you know just one. We're going to get into all that and crypto for the 2 regulators. But first, let's do our companies of the week. Kyle, what do you got?
Well, my company of the week this week is CityCoins. And CityCoins is their goal is to work with cities in the United States to assist them in city fundraising to be used for infrastructure and other projects from each government. And the idea here is to build essentially like a fan token platform for cities specifically, and they're building on the Stacks blockchain. We covered them before because Stacks did a Reg A Plus themselves. And CityCoins is my company of the week because they've got their first city on board, Herwig, and it's not just any city. It's our city. It's Miami, Florida is the first city that's going to be launching a token through CityCoins. And so it's going to be very exciting. It's going by the ticker sign $Miami, and it's essentially a governance token participation. You can get involved in the community. Shout out to CityCoins, as well as Mayor Francis Suarez and the rest of the Miami governance community who have been very progressive in blockchain and cryptocurrency. They, by far and away, CityCoins, my company of the week.
Absolutely great choice. Continues to show you that Miami is indeed one of the crypto capitals of the world. Since CityCoins did, you said, chose Miami first to launch with.
Over San Francisco, by the way.
Wow, that's a very, very big deal, and that's absolutely deserving of Company of the Week, Kyle.
Absolutely. How about you? 103, what you got?
Well, actually, it's one that you chose not more than a few episodes ago. I think maybe episode 100 or so. It's a company called GreenPro, and GreenPro has done a press release letting the world know that they are bullish on security tokens. They've laid out their whole roadmap, including 3 different acquisitions, multiple in 2020 alone. Sapphire, Millennial Sapphire, First Bullion Holdings, which is actually a Malaysian security token exchange. They're licensed and ready to go live with some of these offerings. And they're clearly bullish because they plan to bring their own tokens to the platform as well as develop this digital ecosystem or hub for all financial securities in the region. So for that reason, GreenPro wins my company of the week.
That's awesome. They're doing primary offering, a lot of that kind of initial support. They won my company of the week for launching a $5 million fund dedicated to investing in other security tokens coming to market. So they're really trying to cover it all from the investor side, and it's fantastic and much needed, I think, in the industry.
Absolutely love it. And with that, let's get to the top 5.
And moving into our top 5, we've got a full lineup here of fantastic information. We kick it off here with Gary Gensler, who came out and said that all ICOs are securities. What's all that about?
Well, it's actually related to our main topic, which we're going to be getting into later today. But he came out in reaffirmation that he believes, and his regulatory agency, that they believe all ICOs are indeed securities and therefore must follow securities laws. And his agency, as well as previously before Gary Gensler even joined, was very, very active in pursuing ICOs that may have violated securities laws. So all of this tells us is that the SEC very much so believes that ICOs are still under their purview and that many, if not most or all, are still currently violating securities laws.
And moving into number 2, we had T0 and Exodus. So T0 is onboarding investors onto their platform for Exodus, which is a cryptocurrency wallet. They did a security token offering through a Reg A Plus deal. They raised $75 million. Not only the first security token to use Reg A Plus, but the first Reg A Plus deal to even hit that new $75 million cap. So this is really exciting. They're doing a fully fledged security token, selling tokenized equity in their business to thousands and thousands of investors. T0 is going to be their first of rumored many potential exchanges that will list this token, and more on that is coming later in my segment.
It's super exciting. Exodus is one of the largest crypto wallets in the world, and now they've merged in security token technology, and I would say bridging the two worlds, which is extremely exciting. Number 3, maybe quite the opposite, where we've got XRP in a heck of a lawsuit with the SEC for potentially, again, violating securities laws. In this case, we consider this the legal trial of the year because of the potential ramifications for the crypto industry as a result of the case. In this case, we have an update, actually, where the court has granted, this time Ripple executives, approval to bring in documents from Binance, actually, to prove that they have made sales internationally of XRP, not on any local jurisdiction, or exchanges, I should say, in the United States.
Yeah, here they tried to make the argument, or they're trying to make the argument, that if the sales occurred on an international platform to international investors, then it would not be subject to U.S. securities laws. But considering the company may be based in the U.S. and the people are based in the U.S., the SEC may disagree. Only time will tell.
Might be a little tricky. Anyway, number 4, Aspen Digital has officially announced a full $8.8 million financing round, including led by Rothschild Fund, the RIT Capital. That's a major validation. That's one of the oldest family offices in history that's now joining in on the Aspen Digital train. And they have full expectations to expand across Europe, Asia, and the Middle East, including, of course, their Aspen offering, which is underneath their portfolio. So this does leave a little bit of a question of, how involved is this with elevated returns and what's going on here. But overall, it's fantastic news for the industry because here we have yet another security token company raising money.
And to close out our top 5, we end with Binance, who's back in the news, but now they've announced that they are going to be closing services for European clients, specifically Germany, Italy, and the Netherlands. They will not be able to do futures contracts or trade cryptocurrency at all in 90 days. They've got 90 days to close all of those open positions and to remove your assets from Binance. They are shutting it all down.
Just last week, we announced that they are planning to go from startup to financial institutions, so clearly this is one of those moves to help make that happen. Let's see how it all plays out.
This is a really big deal. Binance has done 1.7 trillion in derivatives volume over the month of June. They've done 16 billion in 24-hour trading volume. They're number 1 in the world. So this is a huge deal for crypto exchanges. We'll have to see how it plays out.
And that rounds out our top 5, so let's get over to the rest of the industry news. And we're kicking off August industry news with a country that was very close to home recently. And of course, I'm talking about South Africa, since we were just there helping launch the TurnCoin STO. And now we've got word that a regulatory body called South Africa's Intergovernmental FinTech Working Group, that's the IFWG, has published a detailed report and a literature review of the benefits and risks associated with asset tokenization that you can go check out. The report doesn't mention much beyond what you probably already know from the show here, but what all this does tell us that South Africa's legislators and capital markets are likely to encourage and support security tokens, which is always a major validation and a step in the right direction. South Africa actually has now launched multiple STOs, making it the most progressive country in the continent when it comes to modernizing capital markets. And next up, we head back here to the States, where we have the legal battle of the year actively playing out in court. I'm referring to the SEC versus Ripple case, where the regulator accuses the firm of selling unregistered securities. We told you in our top 5 that the judge had approved Ripple to receive documents from Binance to prove executives made sales of XRP outside of the jurisdiction of the USA. This approval means that the documents will be relevant to the case and can be considered and could potentially prove that Ripple executives did not in fact sell any XRP in their home country, helping disbar some of the accusations in the case by the SEC. We'll get to all of this and more in our main topic for this episode. And next we saw an announcement from issuance platform Vertalo, which is saying that they are now expanding offices after announcing a $5 million fundraising round. The company plans to more than double its staff and add key executives to its management team. And on top of that, the firm is hosting the Digital Assets and Securities Conference in Austin, Texas on September 21st through the 23rd, which you can actually get tickets for now on Eventbrite. The early bird rates are still available. And moving on to some resources to share with you all, we start off with Asia Investor, which titled a piece, The REIT Stuff. Real estate rally and tokenization scene lifting the market, which has all kinds of great validation that REITs around the world, including especially in Asia, are exploring technology and tokenization to be a more attractive asset class. We can actually expect more tokenized REITs coming from the region later this year. And on the trade news, we have Annabelle Smith questioning if the crypto market is still too wild west for the traditional buy side. Her long and savvy read of the market includes the opinion on volatility by institutions and investor concerns around regulation and how soon most financial firms will need to take a stance on crypto. And last but not least, edition 27 of Peter Gaffney's Tokenize This series came out. And this week he covers NFTs for automobiles, reviewing the usefulness of tokenization for supply chain tracking of car parts before and after the car has been made. This improves title history and the sale process for cars all around, as the underlying parts can be attested to their previous history on the blockchain. And on top of all of that, the biggest use case I found was actually recalls, which happens to car models all the time, and there is no convenient and easy way to alert car owners with specific parts of their potential trouble. So great job as always, Peter, and that's all I've got for you folks. Now let's head over to Kyle and get the latest STO and market updates.
So with the news of Exodus listing soon on T0, I felt like for this week's new STO segment, I'll break down the exit offering and the timeline for token listing. Now, Exodus is an online platform to send, receive, and exchange Bitcoin and over 100 other cryptocurrencies. The Exodus desktop and hardware wallets are very popular in the industry, which actually allowed the company to carry that momentum through to a successful crowdfunding campaign using the Regulation A+ exemption. The firm raised the entire $75 million market cap from international and retail U.S. investors, breaking records as both the largest Reg A+ fundraise while also being the first security token approved to leverage this exemption at all. Definitely a great look for the security token industry here in the US. Due to reduced lockup periods for the Reg A+ exemption in particular, the company immediately began planning its secondary market listing post-closing, rumored to be working with multiple exchanges. T0 is now the first to announce that they have begun onboarding exit tokens and their investors onto the platform in preparation for secondary market trading. According to sources, the token will be listing in the next 30 to 60 days, so keep your eyes peeled for potentially the highest profile security token offering to list on T0. The token is backed by equity in the Exodus company, which generates $2.6 million in revenue as of last year and now has $75 million in cash at its disposal. Dive into the PPN yourself and let me know what you think about this offering. Only time will tell how it's going to perform on markets, but there are strong signs from the market that more and more investors are becoming interested in security tokens, which is great for the industry. So let's now move right into our secondary market trading segment. As always, all news and pricing data is sourced from stomarket.com. Kicking it off is a great article from security token market data analyst Sam Sachs, who detailed what he calls the clash of the titans between INX and T0. If you're unfamiliar, he's referring to what has been a multi-year battle between Open Finance and T0 for dominance in the US market for security token trading. Despite an earlier launch from Open Finance back in 2019, T0 all but dominated this competition for years, up until Open Finance was acquired by INX earlier this year. INX is flush with newly fundraised cash from its INX security token offering and is poised to give T0 a run for its money. Sam gives a full breakdown of the history and his analysis of the INX security token, which just began trading last week, so check this one out. He's been getting a great reception from the larger community on this series, and we look forward to seeing more. Finally, Security Token Market published its monthly security token report for July 2021. Last month, we killed it. The market cap continues to rise, closing the month at an all-time high of $886 million, up 20% from the previous month. This happened despite a strong drop by BCAP, and most of the new gains were covered by the addition of the INX token. Another interesting thing to note is that since INX acquired Open Finance and it still maintains the trading of the previously listed clients, which included BCAP, Spice, Protos, and Science, the ATS's total market cap is getting closer and closer to T0's. The Clash of the Titans rages on, and we'll be all over it here on the show and on Twitter. So follow STO Market there for great trading content and research on top of here on YouTube. So like and subscribe. And turning our attention to the trading market, we're yet again looking at INX, which is up 6% to $1.43 this week, but due to initial listing volatility, it's actually up even more on the daily chart, up 45% from its closing price yesterday of just over $1. With a market cap of $184 million, the token sits comfortably in second place in our market cap chart, above third place T0, and only about $100 million in market cap behind first place Overstock. To pass Overstock, the token would have to go from its $143 price now to topping $230, which is only 80 cents away. Based on its 40-cent gain today alone, it's certainly going to be something we'll be watching closely looking forward. Aside from that, US-based tokenized real estate issuer Realty has many properties that have been thriving this week. If you're unfamiliar with Realty's model, the firm has issued over 100 single-family and small commercial properties for investment to international investors. The company is based in the U.S. and sells U.S. real estate, much of which is Section 8 housing in Michigan, New York, or Florida. And these tokens represent ownership in the actual property, but also offer investors 10 to 12% dividend returns each year, paid weekly into any Ethereum wallet. These tokens trade on the Uniswap protocol through LevinSwap's front end. That's Levin swap. We tracked most of them live on stomarket.com, but we saw 10 trading over 5% in just this week alone on the market. Aside from that, T0 continues to dominate the industry in token trading volumes, in terms of that volume doing about 500K between Overstock and T0's tokens this week, which is much more than what we're seeing from any of the other competitors in the industry. And on the tokenized stock front, FTX continues to build on its lead, with Grayscale Bitcoin Trust topping those charts at nearly 7.5 million in volume just this week alone. After that, it was NEO at 4.3, then Moderna, Tesla, and Square to round out the top 5. And that's another exciting week on the markets. Do your own research and hit me up on Twitter to send me all of your hot takes. And with that, let's move into the main topic.
And for episode 103 of the Security Token Show, today we're going to be talking to you about the SEC versus the CFTC. That's the Securities and Exchange Commission versus the Commodities and Futures Trading Commission. And they actually are having a battle right now over who gets to regulate crypto assets.
There's been a lot of gray area here, right? Crypto assets, Bitcoin, and others have claimed for years that they are commodities and they don't subject themselves to securities laws. Then we have other examples of unregistered securities that have either settled with the SEC or are currently being prosecuted, like in the case of Ripple and others. And so there's been this really big divide, but certainly the crypto industry as a whole is so large that potentially both institutions need to get involved in some way.
Yes, and I don't think it's necessarily their fault either in terms of who is in charge of what. In fact, if we go all the way to the beginning where things were maybe a little clearer, we didn't even know if this was maybe under FinCEN's rules, right? Because Bitcoin and maybe even Ethereum back in the early days were looked at as cryptocurrencies. But we've got currencies, we've got securities, and we've got commodities and futures and all that other good stuff that goes along with it. So who regulates what? Well, back in 2018, Bill Hyman, who was one of the SEC commissioners at the time, had actually made a note or statement publicly saying that Bitcoin and Ethereum were in fact now, because they were so decentralized, no longer securities. However, it's worth mentioning that the SEC did go out and clarify that this was not an official statement by the SEC, even though the rest of the industry pretty much took it like a green light, that they don't have to worry about anything. And from there, we saw a lot of innovation continue to arise. But it's no surprise that, as you pointed out, Kyle, since then, the SEC has been furiously going after different ICO issuers that likely thought upon it themselves that there were no securities laws that they had to follow when they went ahead and issued some of these new tokens.
And we've seen a lot of these SEC commissioners who, again, it does seem like the SEC is the most vocal and controls a significantly larger market with the public and private markets and securities. They've come out many times in the past and suggested that, as Jay Clayton would say, the former chairman, before the new one, Gary Gensler, came out and said in the future, all stocks may become tokenized. They've recognized, Hester Pierce is another commissioner who still sits on the SEC, and she has come out many times suggesting that there needs to be better framework for crypto assets to figure out how to reach decentralization. We've also seen Reg A Plus exemptions be used by issuers and been approved by issuers like Blockstacks, suggesting that in the future, if they are sufficiently decentralized, they may no longer be securities. So there is this significant gray area that Gary Gensler, who recently was appointed, he's taught blockchain courses at MIT many times, he's very fluent in the crypto industry, recently has come out with a pretty stern hand in saying that all ICOs are securities, and he suggested that most, if not all, cryptocurrencies are securities. And this is where I think the CFTC may have a problem with it, suggesting that some of them might not be.
Predecessors in the SEC have said similar statements in the past, so to your point, they may continue to be trying to claim territory here, but today, to this point, not much has changed since all of this started. We've seen multiple bills get attempted to get passed in Congress for some kind of clarity, but we haven't seen any of the major agencies come out with some kind of a framework to use or be a guide for the crypto industry. So that leaves us today where we have a case like Ripple, which is pretty much at the center of this whole gray area issue. You have one side, the SEC, clearly saying XRP is a security, and as a result, they violated 1, 2, 3, 4, and 5. But the argument from Ripple is that XRP is actually a crypto asset, and it is not a security, and therefore they didn't violate any securities laws, and everything is in the clear. Obviously, they would want that to be the case, naturally. If it is the case, that's going to come down to the court, simply because it is not clear as to what Ripple actually is, and there again is no clear guide for any regulator to leverage in order to understand XRP is or is not a security.
I think it also comes down to the international nature of cryptocurrency and these assets, in that it can be incredibly difficult to figure out who's coming from where which money went to which different place. As we're seeing in even just one case here of Ripple, it's been incredibly difficult to pin down exactly where the money went, because a lot of these financial transactions are just very difficult to comprehend.
And many tokens take on different features and multiple features. So it's not that one token has to fall into a single bucket. Many times it can be a utility and a security token. We've even seen it situations where a security token is an NFT. So it doesn't really matter to that. It just comes down to who is responsible for regulating what. And the SEC, at least specifically Gary Gensler's comments, the SEC commissioners mentioned that not just ICOs, but previously also stable coins that are bearing yield or backed by securities, maybe stable coins. He recently called out decentralized exchanges for not having investor protections and gaps that they may soon start going after. He's even mentioned that lenders that are lending against securities and crypto asset securities need to follow securities law. So from their perspective, they're seeing sort of the whole open field as something that they might have to regulate as long as the underlying token is potentially considered a security.
And I'm certainly not speaking for anyone in the CFTC at all here, but you can imagine how someone in one of those regulatory bodies may be frustrated at the lack of actual action done by the SEC, right? There's only so many words you can say until we actually have to figure out what to do with this stuff, and it's not like Bitcoin or Ethereum came out of nowhere, right? It's been almost 5 years since the 2017 bull run, and that means that it's 6, 7, 8 years since Ethereum and much longer than that for Bitcoin, right? So a lot of this is just the inaction and the inability in the US regulatory system to actually define these things and set the rules and regulations that need to be followed, I think is where there's a lot of frustration, both potentially inside of those communities as well as in the greater blockchain world.
In fact, that's one of the arguments that Ripple is actually using against the SEC, saying that because they took so long, they clearly had no idea, and therefore they didn't violate anything until the SEC decided they wanted to go after them. Of course, a little bit to be fair for the SEC, they're just working with what they're given. They aren't able to go ahead and make up that rule book either, per se. So that brings us to where we are today in that case. We have Bill Hyman, who I mentioned earlier, who's going to be actually now subpoenaed and potentially give testimony in this case regarding his previous comments in 2018, which of course will potentially have an impact on the court. And then of course there was this idea that we mentioned earlier in our top 5 of the news today that Binance is actually showing potentially that key executives of Ripple made their sales outside of the United States, and therefore this isn't even an issue for the SEC to begin with. So a lot of different approaches being taken here. One thing is clear, the result of this case could potentially define what crypto asset securities or crypto assets, derivatives or commodities, etc. are. On the other hand, we did see on Twitter a little bit of a spout. The CFTC commissioner actually saying that crypto assets are in fact under the purview of the CFTC. So that brings us back to nothing. We are still in a complete gray area. We have no idea what the actual clarifications are. We do know that there's the Howey test and securities law that must be followed. And for now, that's what we recommend everybody in the United States and in this space follows.
And it's just crazy, right? I mean, the Howey test is fantastic. It's been used and it's the de facto rule book here for securities, but this is something that came about in the 30s, right? Like, this is kind of ridiculous that we're using rules from 80, 90 years ago to define our investment products today. Clearly the landscape has changed tremendously, and I think, as you said, the implications of this case will cause and force regulators to define these things, both from a security versus not security perspective. We've got tax implications that could come from this kind of thing. A lot of different pieces here that need to be unpacked. It's an ongoing saga. Certainly not going to end anytime soon, but hopefully this is a good primer to bring you up to speed on what's been going on in this entire world of U.S. regulation when it comes to crypto assets.
And keep an eye on all these regulations and the legislators as well, because there are active bills getting passed, some that might seem more favorable than others for the crypto industry, so be sure to call your senators who are responsible for promoting and sponsoring those bills to Congress. But meanwhile, all we can do is keep you informed. So hopefully you learned something. If you have any questions, you can reach out to Kyle or myself directly on LinkedIn or Twitter, or you can find us at stomarket.com, where you can get all the latest security token news, all the latest security token trading information, and much, much more.
Thanks again for checking everything out. Leave a comment, like, and subscribe to the Security Token Market YouTube channel for more great content.
We'll catch you next week, and happy tokenizing.